All right, let's jump right into a really fascinating puzzle in the stock market today: Diamond Power Infrastructure. This is a wild case study, really, about what happens when a company basically dies and then seems to come back to life. So, the big question for us is, how do you value a phoenix?
Okay, so what makes this company such a head scratcher? Well, it all boils down to one little number: the price to earnings, or PE ratio. It's just a simple way to see how much investors are willing to pay for a company's profit. For most of its competitors, that number hovers around 41. But for Diamond Power, whoa, it's a jaw-dropping 242.
And yeah, that's the big mystery, right? Why on earth would the market pay more than 5 times the going rate for this one company's earnings? To figure that out, we can't just look at today. We have to go back. We have to understand its incredibly dramatic past.
So let's start with the first part of our story, the anatomy of a collapse. We're going to uncover the whole tale right there in the financial statements.
The speed of this thing was just breathtaking. I mean, look at this. In 2014, the company is doing fine, posts a solid profit of 111 crores. A year later, bam, it plunges to a loss of 184 crores. And by 2017, that loss had exploded to over 800 crores. This wasn't a dip. This was a financial black hole.
So what was fueling this complete free fall? You know, there's this old saying in business: companies don't really run out of money, they run out of credit. And for Diamond Power, man, this wasn't just a saying. It was their reality. And here's the proof. This is the story behind those insane losses. Just look at the borrowings. It started at an already high 1,357 crores in 2014, and then it just exploded to over 2,200 crores in only 2 years. They were drowning in a mountain of debt.
Next up, the missing years. Because after 2017, the company's story just stops. All the detailed financial reports went dark, leaving this huge, mysterious gap.
So this is the narrative arc so far, right? You've got the crushing debt, you've got the massive losses, and then, poof, silence. For about 6 years, the company was a complete financial black box. It wasn't until 2023 that any real reporting started to show up again.
So what on earth brought it back from the brink? Let's get into the signs of a turnaround. This is where we start piecing together the clues of what looks like a pretty incredible comeback story. Okay, so the first major clue is all about who owned the company. In late 2022, look at this. The original leaders, the promoters, they only held about 11%. The vast majority, almost 67%, was owned by domestic institutions. And who are they? Well, they're the banks and the lenders who basically took control after the company defaulted on all that debt.
Now, check this out. Fast forward just about a year and a half to March 2024, boom, the entire picture has flipped. The institutions, they're gone, and promoter ownership has rocketed to almost 95%. This tells you something huge happened during those missing years. A massive restructuring took place, and the original leaders bought back their company.
I mean, this wasn't some slow, gradual shift. This was a seismic event. For the original leadership to come back and pour that much money in to retake control, that is a powerful vote of confidence. They clearly believed this company could not only be saved, but be made profitable again. And you know what? That belief was immediately backed by some incredible results. If you look at the last year, what we call the trailing 12 months, the company's profit growth has been a staggering 99%. After years of just bleeding cash, the ship wasn't just stabilized, it was moving at full speed again.
And then came this, the single biggest sign of a new beginning, a massive order worth nearly 1,350 crores from one of India's biggest players, the Adani Group. This isn't just about revenue, it's a huge public seal of approval, telling the whole world that Diamond Power is officially back in business.
Which brings us all the way back to where we started, back to that sky-high PE ratio. Now that we have all this context, the collapse, the missing years, the dramatic turnaround, we can finally start to understand it.
You know, the key thing to remember about any stock valuation, especially a tricky one like this, is what a stock price really is. It's not a report card on what a company did last year. It's the market's collective bet on what it thinks the company will do in the future. So Diamond Power really has two completely different stories. You've got the story of the past, failure, debt, and total collapse. But the story investors are buying into today is the story of the future. New leadership, new profits, and a massive new contract. They aren't paying a premium for the company that failed. They're betting on the company that rose from the ashes.
And so this is where we land. That high price tag isn't for the company as it is today. It's for the company investors believe it's going to become. And it presents a really stark choice. Are we watching a legendary comeback in the making? Or is this just a high-risk gamble on a company with a very troubled past? That's the billion-dollar question the market is still trying to answer.